Bank and credit union executives, technology leads, and internal improvement teams rely on the lab and our intellectual property knowledge base to gain the strategic insights they need to improve performance across their financial institutions. Case in point, retail branch staffing. Imagine if you could precisely align staffing to demand in just minutes. How much power would you gain if you could get a clear, defensible financial case for every staffing decision? Introducing the retail branch staffing model from the lab. In just one dashboard view, you can easily see which branches need more coverage, where resources can be redeployed, and how each change impacts cost and service levels. The retail branch staffing model from the lab includes multiple staffing floor plans to fit different operating strategies, because we know that one size doesn't fit all. Here's the actual retail branch staffing model as it would look at your financial institution. For this demo, we'll show it configured to the industry benchmark with a floor of 3 FTEs per branch. Here at the top left, you get a quick overview of your current FTEs, actual required FTEs, and then the annualized potential benefit in dollars, calculated from the difference. This serves as your at-a-glance financial case for any staffing realignment. The branch filter on the left lets you focus on individual locations or groups. You can see that the data updates in real time. Now you can adjust the different parameters at the top. The amount of time spent in minutes per FTE for things like non-customer-facing activities, opening accounts, originating loans, or performing teller transactions. And you've got a slider for the fully loaded cost per FTE too. So you can easily run what-if scenarios and get instant calculations of required FTEs and benefits. Now check this out. Here's actual versus required FTEs, sorted by branch and color-coded for easy viewing. The yellow bars indicate the floor of 3 FTEs per branch, as we'd mentioned as the industry benchmark. The dark blue bars show how many FTEs are needed to actually do the work, and the light blue bars show you the actual number of FTEs at each branch. So it's easy to see at a glance the actual versus required staffing. In this example, look at how overstaffed some of these branches are. Scroll down and you get comparison charts for the different workload drivers for each branch: teller transactions, new account openings, loan originations, and total deposits for the last 12 months. So it's easy to see why a branch would need more or fewer FTEs. Make better executive decisions affecting branch staffing coverage, cost, and operational resilience. It's all possible and easy with the retail branch staffing model from the lab. It gives you a transparent, demand-validated, and policy-tested staffing plan. So whether you follow the benchmark standard or adjust to a higher floor, you can quantify the impact before making the call. Transform your bank or credit union with the power of AI and advanced analytics. To book your demo, contact the lab today.